we
Howdy,
hear
howdy.
Belinda?
No, I can't
Can
hear
you hear me?
Belinda.
Oh my God. Why is,
Try it
something
on your
like,
phone, Belinda.
yeah, it may work better on the phone. Hello, everybody. Welcome to Real Estate After Dark, where the market never sleeps and neither do we. It's dark where Adam's at, and it is light where I am at.
And
Well,
the
it looks
storms
kind
are
of,
going here, and I hope everybody's safe.
yeah, my daughter. Like I said, she's got a tree down in her yard. Jack, I don't know. Did it hit Gallatin area?
It's been coming through. There's another back setup coming through.
Okay, can you
Gotcha.
hear me now?
We can
I
hear you now.
I'm really here.
Well, I had trouble too. We're all mobile right now because of the storms with Adam, and then you had other prior engagements, and I'm out of town. But yeah, we're all here. And
We're
actually,
all
I had
here.
my
I actually had Lily with me at the office too.
oh wow,
Lily was going to be my
my
co-host tonight.
oh gosh, my sister-in-law just left. I'm gonna call my son right now. Tell him to hop on there and learn how to get his credit ready. So. So yes, so tonight's episode, sorry, we're just sitting here bullcrapping, is pretty much credit repair because there are a lot of times that there are people that want to buy a house and they think, oh, I've got a couple medical bills or I've got this or whatever, and I can't buy a house, and they assume it, so they never try.
Right.
You find that?
I do. And I think a lot of times people are scared of what's on their credit report and they almost get paralyzed and just refuse to like even try to even look at it. And I think that that's something that's really important, that if people will let us pull their credit and tell them how we can help them clean it up, it makes their life so much better.
Yeah, I sit and tell folks, Belinda, that don't look at it as that you're pulling their credit and it's going to damage it. Look at it as it's a credit checkup.
That's right.
Yeah.
Well, and the cool thing is we can do a soft pull. We pull all three bureaus, so we're not even hurting your credit. I tell people we're just kind of peeking at it.
Yeah, there you go. Well, do you want to introduce yourself, Belinda, so the people that don't know who you are, which probably isn't many,
Well,
can
sure,
find out?
sure. I will be glad to. I'm Belinda Arender. I manage the mortgage division for Prinus Bank. We are a full service local lender, can lend in 45 states. So we're all over the country. I've done mortgages for 32 years. So if it can be done, I have either done it or know how to do it. So I bring a lot of experience, which also means I'm very old, but we're not going to talk about that tonight.
Whatever. Well, you don't look very old, but we do
Well,
know that you're very educated and very smart when it comes to mortgages and different ways to do things, and and that's something that people don't understand. I remember when I bought my first house, I got 4 no's from 4 different lenders, and then out of the blue I got this call from a realtor, and I don't even know how she got my number. Well, I didn't then, but I probably have a good idea now. But you know how people, they get your number because they know that you're looking, and they start telemarketing to you, pretty much, in a sense, cold calling. Um, so she called and she said, "Hey, I heard you're looking to buy a house." And I was like, "Yes, I've already been through 4 different lenders. There's nothing we can do." She was like, "Well, if I told you," I said, "what, that you got a lender that can do it?" She said, "Yes." And I said, "I've tried 4 times. It's just not in the cards." And I'd be doggone, it wasn't 45 days I closed on a house.
there
So
you
it's
go.
like, you just got to get with the right person
Yeah.
Absolutely.
that
And
knows what.
and sometimes you have to get a game plan together. I can tell you that when my husband and I first got married, we thought we needed a house and we applied for the house and got turned down. And the lady said, "Belinda, what you need to do is take," it was, my payment was going to be 650 a month. Again, this was 32 years ago, okay? She said, "You need to take that $650 a month and set aside in a savings account to make sure that you're ready for the payment because our numbers show that you're not." And I'm like, I saved that much at Walmart. I could pay that payment. Well, let me tell you, 6 months in, I was thanking the good Lord that we had not bought that house because we were struggling to save that every month.
Yeah.
Oh, wow. Yeah.
I
And
remember
that's a
my
good
first house. It was an 80-20 loan, and I don't even know how she got
Oh,
us approved. We
dude,
were
me
doing
too. Well,
a rent to own at the time.
no, an 80-20 loan is not rent to own. It was just a different type
The
of loan
80-20
program.
loan was after we were renting the house
Okay.
as a rent to own, and then decided let's go ahead and buy it because that was our end game. And I found somebody said they could do something, but I ended up getting an 80-20 loan.
Isn't that the kind of that crashed the market, Belinda?
That was among the time where if you could fog a mirror, you could get a mortgage. We we had 80-20s, we had 80-20s interest onlys, we had 125% loans. Those were
Oh,
the days that did crash the economy. Now I'm not
Right.
saying, Adam, I'm not saying it was your loan that did it, but I'm
No,
just saying in
but
that
we struggled.
period,
Yeah.
yeah,
we did some pretty crazy
yeah,
loans.
Yeah. And
yeah.
we struggled with it for years. And we finally figured out what we needed to get right on it. So
Mm-hmm.
Yeah.
So let's say, Belinda, say someone comes to you. Uh, I'm trying to think. So, what would be the thing that people think is like, oh my God, I know I'm not going to get a house because this is on my credit, but
Yeah.
you could tell them, yeah,
Yeah. So, every single person is different. I've had people that are like, oh my God, my credit's horrible. This one time back in 1993, I was late on a car payment. Well, okay, 1993 doesn't even show on my credit report today. So, we're not going to worry about that. So, a lot of times people don't know what's going to show on their credit. A lot of times people don't understand that with a payment, you have that window, that 30-day
yes,
window before it's late. So let's say that you've got
yeah,
a American Express card, and that American Express card is due on May the 5th. You have until June the 4th, because 31 days in May, June the 4th
yeah,
to get that payment in to be within that 30-day window. And that's where a lot of times people are like, oh my God, I made my car payment late. It was due on the 5th. I paid it on the 7th. That's not a late payment.
yeah.
right.
So that's something that's very common is that people don't understand that 30-day window. The other side of that 30-day window is this, well, I paid it within 30 days. I paid it on June the 5th. Well, May has 31 days.
Yeah. I didn't even realize that.
You
Yep.
I'm
missed it
sitting
So
by a
here
day.
trying to like, wait a minute, that's not late. But yeah,
yeah.
that's see, I wouldn't even think of that. Okay.
Yep. You went 31 days, which means you had a 30-day late payment. Yep. So
Wow.
I see that. A lot of times I see, and especially I completely get this because, my husband is sick. So medical collections, I laugh with my husband every time he's in the hospital. I say we get a bill from everybody that walks past the door, like the people that visited the neighbor's room. They sent us a bill last
Oh,
week. I mean, I just feel like there's a lot of collection accounts that happen that are medical. Now the great
yeah.
thing with that is that there are new rules that as soon as you pay it off, they're supposed to remove it from your credit. So that's the good news. But
That
until
is
it's removed, yes, until it's removed, though, it's still affecting your mortgage credit score. Now, there's different types of FICO models, which are the mortgage, and different types of like a car lot, like a credit card company. There's different FICO models. So something that may
yeah.
affect the mortgage model may not affect like the credit card model. And that's where people say all the time, I have a 720 credit score, and then I pull the mortgage score and it's a 640. But it's because
Uh,
we have different grading models.
yeah. Okay. That makes sense. So if do the medical bills pull down the credit score?
If they are on the credit report, yes. If they come
Okay.
off, then you get your points back. But and here's the crazy thing about collection accounts. If it's a $3 collection or or $30,000 collection, you're getting hit with the same number of points. Now, where you see a difference is the date, the activity dates affect the points, but the amount of the collection, I don't see it affecting the scores.
Wow.
Goodness.
Okay. So,
Well, I know I've had some that, they're right at the line of, 550. I had one that she said she was at 652,
Mm-hmm.
and we had a lender that she was working with, and they want her to get to a 660. So I'm not sure, because I know 640 is the for THDA assistance, but they're saying something about getting her to a 660, and I was like, before I even thought about it afterwards today, I was like, I should have got her to get with someone else just to get a second opinion.
Yeah, so there's different, like with mortgages, credit scores play a huge role in the interest rates, but also the mortgage insurance. And each 20 points that you go up or down, you're getting hit with different interest rates and different mortgage insurance factors. The lower the score, the higher the interest rate and the mortgage insurance is going to be. So it sounds like if they were trying to get her under above 660, they were trying to get her to whereas that she could have that lower interest rate and the lower MI than somebody with a 640.
Okay,
so that could be
gotcha.
a factor like that to income also.
Correct. It could be because
They
the
need,
mortgage insurance could be throwing the debt to income out of whack.
yeah. Yeah.
Yeah,
So if they bump a little bit, got a better interest rate, then the payment would then, yeah, that makes sense.
Correct.
See, and all these tricks, people don't realize the work that y'all do behind the scene. You think that it's just um, get an approval or you don't get an approval. And, everybody asks, well, what's the interest rate today? Well, it's not, the interest rate is not the interest rate for everybody. Like they've got that mindset that if it's advertised at that's what it's going to be. And
yeah,
it's just,
Exactly. And I tell everybody it's very similar to DNA. Everybody has a different DNA.
yeah,
Everybody's mortgage is different as well, based on the credit score, based on the debt to income. I mean, sometimes even the number of reserves, which it like their savings that they have, can affect that mortgage approval.
yeah, yeah. Okay. So what about like, uh, like if somebody has something on their credit and they
Mhm.
dispute it, or they're before they come to you, they know they have stuff on their credit and they're like, well, I'm going to go ahead and dispute this before I go try to get a mortgage.
Yeah.
Exactly. So tell us why we want to do that.
So years ago, again, I've done this for a very long time. Years ago, you could dispute it and it takes it out of the credit score. And the
Yeah,
mortgage companies had not caught on to that yet.
yeah,
Now we know that if it's in dispute, it's not in the credit score, so we don't have a valid credit score. So the dispute has to be resolved. If the total amount of accounts disputed is over a certain amount, they've got to be resolved before we can move forward on the mortgage.
gotcha. So used to, well, I guess the rule of thumb is once you dispute it, they have to remove it for 30 days, right? While they investigate it and give you the opportunity to prove that you either paid it or it's not yours.
As
And if
long as
not,
it's
it
in
goes
a
back.
That's as long as it's in that disputed status, then it's not factoring in the credit score itself. It's still going to show
Yeah,
on the credit report. It's just going to be a disputed consumer disputes. Then it's not factoring into the credit score itself.
I gotcha. So
mm,
that's why you just say hold off on it.
Yeah, that's why you need to actually get it resolved. If you know it's wrong, if you've pulled your credit
Yeah,
report and you've looked on there and you know it's not your debt or you know you were not late, dispute it because it should come off. It should
yeah,
come off. But if you're just disputing it to
yeah,
get the credit score up, we're on to that.
yeah. Okay.
Yep. I don't know. I guess unfortunately we're onto it because it is going to affect your score.
Yeah.
Yeah.
What about rapid rescores?
Yeah, so
You know,
yep. So we do two different ways with rapid rescores. So because we pull a soft pull initially, let's say that you're pre-qualifying and there's stuff on your credit report that needs to be fixed prior to us closing. If I look at your credit report and let's say it's a credit card and that credit card is maxed out, and I know if you pay it down to below 30%, you're going to pick up, let's say, 50 points right there. Then I'm going to tell you, go ahead, pay this credit card down to $300. I'm going to give you an exact number. I'm not going to say pay it down to around 300. I'm going to say pay it to $300. And once
okay.
and let's say that you're out looking for a house. So I'm going to tell you up front, do this immediately. So by the time
Yeah.
you get ready to make an offer and I pull a hard inquiry, it should already be updated. If you do what I tell you to do up front, it should be updated. If let's say you find the house first, sometimes it goes in reverse order. You find the house first, then you get pre-qualified and I need those points, then at that point, I'm going to do a true rapid rescore where I'm going to go in. I've already pulled the hard report. I'm going to go in, I'm going to have you pay down, get me an updated balance. I'm going to send that to the credit bureaus. I'm going to have them manually update. And in 3 to 5 business days, I'm going to have your new score back.
Oh, wow.
So it can
Good.
be done fast. With
Yeah.
that, I am pulling your credit twice, which is within
Yeah.
30 days. So it's not going to hurt you. However,
Yeah.
it is two inquiries. Whereas if I
Yeah.
can do it off the soft inquiry, it's organically going to update. And then I can just do the one true inquiry for you.
Oh, so
So
that's why you do it.
yes, but there's ways either way. I mean, we can do it either way. I prefer to do it organically if I have time, simply so that I don't have to pull inquiry twice on them.
Yeah. Yeah. That makes
Yeah.
sense. No, clients appreciate that because not
Yes.
every, like how you've got to look out really for the best interest of the client. And, with you coming up with a little bitty, tips like that and knowing how to be very strategic to not affect their score or their credit, I'm sure that's very much appreciated.
Well, we're definitely always going to try to present them with the very best options so that they can not be intimidated about the mortgage process. Because already there's a lot about mortgages that I tell everybody I do mortgages every day. So they're second nature to me. They don't scare me, they don't intimidate me, but it's all in what I do every day. Like if I go
Yeah.
to the doctor, y'all, I will cry like a baby if they tell me I'm getting a shot because I'm terrified of needles.
Oh, that's my
So,
daughter. I had to
well,
hold her hand.
yes. So I don't want people to be terrified of the mortgage process
Yeah.
simply because they don't do it every day, right?
Yeah.
Yeah, and I think
It's
that's one of the biggest part of why a lot of people are afraid to take and have it looked at because they
yeah.
are afraid that they can just, they hear they've heard so many horror stories over the years of, you know, how their credit gets hit and how it hurts them and everything else. But there's been things that have changed since that crash in '08 that have helped to change a lot of the processes to where it doesn't, damage the credit as much as it used to.
Exactly. We've
Yeah.
gotten very user friendly, I like to say, where we try to make things hurt as little as it can, if that's the right word, and compared to the shot needles, right? Also, one thing, if we don't look at your credit, I can't best help you. I have customers, they'll say, "Oh,
Uh-oh.
I'm going to clean up my credit." And I need to help you clean up that credit because there could be things that you do
Yeah.
that actually end up hurting your score.
Yeah.
Yeah.
And you could overpay, thinking, oh, well, I've got to pay off this expensive thing first, when in all reality, you could have paid off the $13 phone bill or newspaper bill, which I had on my credit at one time from the Tennessean. And like you could have paid that off and increased your score more than paying off a whole credit card.
Exactly. I have people that they've like, oh, I just cleaned up my credit. What did you do? I paid my car off. Well, but you left your credit cards maxed out. You
Yeah.
should have paid
And,
off your credit cards or paid the credit cards down. And sometimes the
yeah.
credit bureau even likes to see a little bit left on those credit cards. So don't pay it to zero. Let us look at it. I can run a simulator. It can tell me to the dollar what it wants that balance to be.
Wow.
Yeah, I've had a
I,
lot of people, sit there and say, "Well, I need to get my credit cards paid off," and I tell them, I said, "Don't pay them off.
yeah.
Don't pay them off." I said, before you do that, let's get you with a lender, and let them tell you exactly what you need to do with them.
Exactly.
Because they're
Because a
like, "Well,
lot
I
of
need to get rid of them. I've got, It's like, no, you don't.
and
So
definitely don't close them because the
Um,
credit bureau likes to see that you have access to credit.
yeah. Now,
yeah,
does it the score down too, though, doesn't it?
If you close the score, because so if here's the thing, the credit bureau likes to see a healthy mix of different types of credit. It likes to see some installment loans, which be your car loans, your student loans, a mortgage. It also likes to see revolving, which would be a credit card, maybe a home equity line of credit. It likes to see a healthy balance, both types of
Mm,
loans, because both of different types of loans have different requirements. It wants to know that you know how to make a monthly payment consistently, but it also wants to
yeah.
see that you have the ability to manage a line of credit. So if you close out all of your line of credits, you're going to lose those points. So don't close
Oh,
out your line. Always have a line, some type of credit card, line of credit, something open over here that's that revolving, so that you've got that healthy mix so that you're getting as many points as you can with your score.
that makes
yeah.
sense. Yeah. Some good stuff. What else can you think of that you know
Well, if
people?
somebody's looking to take and come to you and say, "Hey, we need you to look at our stuff,"
Mhm.
what what do they need to have to give to you?
So to do the credit report, name, date of birth, social, address. Now, in order to pre-qualify, I also need income information. So if you're going to do the pre-qualification, I need your name, date of birth, social, address, employment, income. And with those things, we can pre-qualify you. Also, with that, I'm pulling the credit bureau. If we do it, the pre-qualification up front, I'm going through that credit bureau and I'm telling you the things that you can do to improve your score if there's room for improvement there. If you've got a 780, there's not you can't improve much more, okay? But let's say that you've
Mhm.
got a 660, but you've got a credit card over here that's maxed out, that if paying that down gets you to a 720, that's going to make a huge difference on a conventional mortgage. Let's say that 660, let's say that rate today is 7.25. That's 720, you may be 6.875. So you've got a savings in the rate, but you also save on your mortgage insurance. The difference of that 660 versus 720 on a 95% mortgage insurance factor, almost double.
Oh,
Wow.
wow.
So there's a huge difference there. So the better we can get that score, especially on conventional, the better we can get that score, the lower the MI is going to be and the lower the interest rate is going to be.
Now, a lot of people, think conventional and they think automatically more expensive, but there are actually 3% down conventionals, correct?
Absolutely. We have a couple of 3% down options. We have the Home Ready and Home Possible, which are based on the income limit for that area. 3% down, it has reduced mortgage insurance, so it's a great product. We then have a traditional 97% conventional. We have a 97% AMI loan, which is average median income for that area. So it's waiving some of the loan level price adjustments on it. So we have multiple conventionals that only require the 3% down.
Yeah, I'm glad that you said
Oh,
it
wow.
because I have a lot of people who's like, well, I'd like to get a conventional, but I have to put 20% down. I was like, no, you don't. You can put 5, 10. I said, there's even 3%.
And that's
conventionals
what's
if you
that's what
qualify for those.
exactly. That's what's so funny is that conventional actually requires less down than FHA because FHA is 3.5% down. So under
Yeah.
that conventional 97, you're only doing 3% down.
Yeah.
I think
Which I mean,
FHA is structured to where, it's more affordable, uh, for those that may not have the highest credit score or, so you're not, yeah, you're paying PMI, but you're not, your interest rate is usually a little bit lower because if you have like a lower interest rate, like you said, Belinda, and try to get a conventional, your payments are going to be more.
Correct.
So
So
that's I'll go the FHA route at 3.5% if they can't do the zero down. Yeah.
right. FHA is really good. There's a couple of times that FHA is more advantageous. Aside from the interest rate. So we'll table that. We'll talk about that in a second. But FHA is a little bit more forgivable on big issues on credit, such as foreclosure, such as bankruptcy, such as deed in lieu of foreclosure versus conventional. Conventional is going to have a longer wait. I call it a penalty box. With conventional, you're in the penalty box
Yeah.
longer with those major derogatories than you are with FHA. The other thing with FHA is FHA is going to let my back ratio go if the credit score's good. If my back ratio can almost hit 57, which is my total debt versus with my new house payment versus the monthly income. Whereas conventional hard stop at 50.
Oh,
So
wow.
you can
Yeah.
qualify for more under FHA on ratios than with conventional sometimes. Now, those are the goods and the bad. Now, with FHA, the difference with FHA right now, FHA rates are lower. So right now we're seeing lower FHA rates than conventional rates. Okay. The difference there is that that's not always the case. It just depends on the market. That just happens to be the market we're in right now. FHA rates are
Yeah.
lower. And the other thing with FHA is regardless of your credit score, everybody gets the same mortgage insurance factor. Whereas remember with conventional, everybody had a different DNA, everybody got a different rate on MI based on the credit score. FHA,
Yep.
standard. You get the same, I get the same, Adam gets the same. We all get the same mortgage insurance factor for FHA. So there's some change differences there. Now, the bad part, if you want to look at it this way, is with FHA, if you do less than 10% down, you're carrying mortgage insurance for the entire length of the mortgage. Whereas with conventional, if you do, when you hit that 80% mark, you can request that mortgage insurance to be dropped. FHA, if you did a 95% FHA loan, the only way to get rid of that mortgage insurance is to refinance the whole loan.
gotcha.
Well, so
Now we have a question that says, go ahead, Crystal.
no, go ahead, Adam.
We've got a question. Is that why sellers don't like FHA because they don't want to do the repairs required by FHA?
So FHA has modernized a little bit. They're not as hard on repairs as they used to be. Years ago, it was almost like a home inspection they were doing when they did an FHA appraisal. But they really have relaxed some. They're going to be a little bit harder than conventional, but not nearly as hard as they were like in 2012 and that era when it was pretty much a home inspection that was happening with the appraisal.
Yeah. That's
Yeah.
good. That's good to know.
Are you guys seeing
What was
the
it?
questions pop up on the screen by
No.
chance? No?
I have old eyes. I can see a block down there, but I can't see what it says.
Okay.
Uh,
It's something new that
Well,
we've got going. So we've got the
yeah, I don't
questions can pop up on the screen. So,
Oh, they are popping up on the screen?
yep.
Maybe I'm just,
So
I
if
don't know.
anybody's
My eyes,
listening or something like that, if they say something or, leave us a comment, it'll show up on the screen as well. So,
oh, okay. You got something else figured out. Every time Belinda we do this show, he figures something else out. No, there was something that what we were talking about, the PMI falling off. Can't
That's
remember
on the
what it was. I
conventional
want,
at
yeah,
80%.
on,
You
yeah,
keep fading out, Crystal.
yeah. I just can't remember what it was. I can't remember what that question was, but I wanted to get to, anybody that's watching their questions first, and then I forgot. I should have known I was going to forget, but that comes with age.
I don't want to hear it. She's younger than us, Belinda.
Hey,
Belinda, look, we were in New York
no.
today. You just got back from New York, right?
Me?
Weren't you? Weren't you
Oh,
just in New York?
no, I was in Boca, Miami.
Oh, Miami. Oh, why was I thinking you were in New York?
I
I
don't know.
don't
I'd
know.
like to go to New York.
Oh my gosh. Oh, no, don't drive here. Just say that. Just don't drive. Okay. And don't take the cabs or Ubers because I don't know how they don't get, I don't know. It's crazy. But my head is pounding just from the stress of my husband almost hitting about 1,000 people today,
Oh
rather
no.
on or in a car. But it's not because he can't drive. It's because everybody around us can't drive. It was awful. But anyways, yeah, I had a really good question. Okay, it'll come back. So credit repairs. Okay, now I've
Mhm.
known a lot of people that and I'm guilty of this. When I lived in New Mexico, my husband at the time and I wanted to buy a house, and we
Mhm.
had all this credit card debt. So we thought about consolidating
Mhm.
so that we could get one payment and then maybe that could help us pay it off. Is consolidation a good plan or no?
So there's it's a double-edged sword. If
Yeah.
you are structured enough that you can pay the debt off without getting new debt and taking the place of it, absolutely. I'll give you a great personal example. When my husband and I first got married, I loved me some credit cards. And I
Yeah.
ran my credit cards up. So I went and got a debt consolidation loan, but I didn't cut up those credit cards. So guess what happened in 2 years?
You spent more on them
What?
credit cards.
I had the debt consolidation loan and I had charged the credit cards back up. So that was not a good
Uh,
plan. So when
yeah.
I did the second debt consolidation loan, I cut up those credit cards. I didn't close them, but I cut them up so that I would not use them. Then in that
Yeah.
situation, I was able to like really make some really good payments and get that debt off of us. So in that scenario, if you're going to be a very structured and you're going to actually get the debt gone, absolutely. I definitely think it's a great option, especially because usually debt consolidation loans are going to be at a lower interest rate than the credit cards. So you can actually see that you're making some progress on them.
Okay. All right. That's good to know.
Yep.
Bankruptcies. So, how long after someone files bankruptcy can they buy a home again? And I know it depends on like you said, the loan type. But not only that, does it matter like chapter 7 or 13?
Yes, it makes a huge difference. At chapter 7, you're going to have to file and then discharge, and then you have a 2-year wait from discharge on FHA if there's not a home involved. If there's a
Okay.
home involved that you let go back, you file, you are then discharged. Through the discharge, the house actually goes through foreclosure. It then at the end of that, you have a 3-year wait from that foreclosure of that house because the only way to get that title back is that true foreclosure process. So you have a 3-year wait if there's a home involved from the date of the house foreclosure. Okay. Now,
Okay.
to make it a little bit more complicated, if it is a government loan that you have, FHA loan on it, they are then going to put what's called a caver's claim on you. So you then have to wait till that caver claim expires, which usually adds about another 60 days to it. So it's about a three and
Mm.
a half year process in that scenario.
Yeah.
Okay.
Wow.
Now, with a chapter 13 is where you repay your debts. A 7 is where you wipe them out.
Yeah.
A 13 is where you repay. So with a 13, after 1 year of repayment, you can actually request the trustee to allow you to purchase a new home. Now, with that, it will be a manual underwrite, so there's going to be some additional mortgage requirements. But after a 1 year payback with an approval from the trustee, then you can buy a house.
Oh, wow.
I didn't
I
know
didn't know.
that.
Yes.
Yeah, you for a year. So
So,
just a
so
manual.
Yep, it's a manual underwrite, so your ratios are going to be a little bit lower, but your trustee, like when they send the letter, it says payment not to exceed, interest rate not to exceed. So it's very specific under the terms that the trustee will allow it, but it absolutely can be done.
Hmm.
So a house was involved, and what I mean by that is like you reaffirm on it, like
Uh-huh.
they lower interest, and you still continue with that house, but you want to move to another house, buy another house.
Yep, you can sell as long because you continue to make that payment. You could sell that house, buy the new house. Again, if you're in the 13, you have to get the trustee's approval because any new debt has to be approved through the trustee. But yeah, you can do it that way.
Okay.
I did not know that,
Yep, yep.
Yeah.
which
All
is
right,
why
Adam.
we do this show.
Exactly. Because you don't know what you don't. You're learning.
That's
Right.
right.
So,
Um. Oh, let me tell y'all exciting today. So I don't know if y'all seen the pictures or not. So there's this restaurant here in New York that is so good. Well, I've heard it was good. TikTok says it's good. Okay, so it's I don't know, Belinda. Have you seen the pancakes that have the honey butter syrup?
Yes.
Have you seen the TikTok? So I wanted these pancakes. So that was our goal this morning, to get up and go there, get pancakes. So on the way there, I thought, well, I'll, see if they take reservations or whatever. And you could call and get like well, they said they didn't take reservations. You had to go through this app or whatever. And so I did. And what I thought I made a reservation, I didn't. So when we got there, it was a 2.5 hour wait. And
Oh,
I was like,
wow.
my pancakes, because everybody was starving. So we're sitting out there, and then this black truck pulls up, and these bodyguards get out. They got the earpiece in, and uh, after us passing the P Diddy trial going on, and all the news anchors out there and stuff covering that trial, but so they get out, go into the restaurant. Of course, don't stop at the hostess stand, just go sit down. And so one of the bodyguards comes back out, and I'm looking at him. He looked at me, and I was like, "Hey, won't you bring me some pancakes out here?" And he was like, "You want some pancakes?" I said, "Yeah, I want some pancakes. They told me it's going to be 2.5 hours." He was like, "You want some pancakes? I'll bring you some pancakes." He brought me a plate of damn pancakes out.
I love it.
Glass plate and everything. I was like, "I gotta take your picture." So I took his picture holding my pancakes. So we all sat there on the sidewalk and just ate the pancakes.
Well, who are they there with?
I don't know. So we asked the driver, and the driver was like, "Well, that's the bodyguard, but I can't tell you who I'm carrying around, of course, for safety reasons." And we're like, "Okay." So then my husband tried to be slick and go in with his meta glasses on and take a video of the table so we could Google. Still can't find out. But I think when he went through, the person I thought was probably the celebrity, because he was kind of like a little, he didn't look like a celebrity. The bodyguards looked more like the celebrity. You know what I mean? So he was
Yeah.
missing from the table. So when my husband took the video, so we have no idea who he was. So, but it was the bodyguard that brought me the
You're
pancakes.
so funny. You asked see, I would have been like, who you got with you? You asking for pancakes. I'd be like, who you got with you?
I just wanted
I'm surprised she
pancakes.
even ate the pancake because she's on the carnivore diet. So she really went against her diet.
I done the pancakes. I have pizza, New York pizza, and I have New York bagel. I think that's all I had. But yeah, so I'm gonna come home about 10 pounds heavier. But That's okay.
You should be complaining.
I'm oh, not complaining. I'm gonna be good. All right. What else can we think of, Adam? You got to have some questions.
I do. I do. That's what I'm saying. We kind of asked a lot of them. Um, so, Belinda, what is the minimum score for somebody to get pre-approved?
Yeah, it depends on the loan product. So we mentioned earlier, THDA is a 640. Um, USDA, in order to get an automated approval, is also 640. Now we do manual underwrites down to 580. We also have investors that will do FHA down to 500. Now, once you get below a 580, you have to have at least 10% down. But, depending on the credit scores, we have lots of options.
Wow. Do y'all have any more grants right now going on?
So we have THDA, which is
Yeah.
ongoing. We do have some grants right now. We're actually out of grant money. However, they do replenish that money from time to time. So it could be that in the morning we show up and we have more grant money available.
Okay.
Okay.
And people find out about those grants. Just
So yeah, they need to get pre-qualified with their lender, and their lender will let them know about it.
okay.
There are income limits on them, and the income limits are rather low. That's the downside
Yeah.
to it, especially in our market where houses are so expensive.
Yeah. Okay.
Yeah.
But
Uh,
THDA did come out today and raise their income limits, so that was really good news.
Oh wow.
dang.
They
Where are we
not
at
much
on that now? That was what, 400 recently, right?
That's their maximum purchase price, but depending on the
price. Yeah.
county, the actual income limits have, like, how much a person can make has gone up.
Mhm.
And the really cool thing about that is they only go off of the person on the application. So if, like, let's say that they qualify just in their name, I don't have to
Yeah.
count total household income like I do on USDA.
So is that a
Got
new thing?
So the income limits are new, and the changing of the household income limit actually happened a couple of years ago. So that
Yeah.
is not new, but they did come back out today and again say that it's based on just who's on the application. And
That's
Gotcha.
cool.
I was going to tell you the income limits. This is
Well,
effective
she's
for
looking that up, Crystal. Donnie wants to know what's the New York pizza as good as his.
Oh, Donnie, that was some damn good pizza. Oh my God. So it was very thin crust and it looked bad because looked like it'd been sitting out there a while. And what they did, I guess, when we ordered it, is they popped it in a toaster oven. So it remelted the cheese and the crust was just like this thin, crisp, so good. But no, Donnie, it definitely wasn't as good as your pizza.
All right, I've got the new Rutherford County limits that are effective June the 2nd. Do y'all want to take a guess at what the 3 and above living in the house? Do y'all want to guess what the income limit is?
Yes, let me guess.
170,000.
Close.
What did you said 170?
Yeah.
Is that what you said? Uh well, because I thought they were like 128-ish, weren't they?
They were lower and they've gone
Before
up.
150.
165. 165.
Split the difference there, Adam. It's 167.20 for 3 or above in Rutherford County.
Oh,
Wow.
Yeah, I mean that's a
that
really good income limit.
that's a
Right.
huge jump. So
Hmm.
And,
that's
on
across.
top of that, the news that's there saying that Rutherford County's, we've got the best opportunities for home prices. We've got the most, what was tip of my tongue, the best value on homes
Yeah,
in
the
Rutherford County.
Rutherford County has one of the more affordable
There you go. Thank you.
yes, very obviously it's still a high cost area, but compared to the Nashville MSA,
Oh
yes,
yeah.
Rutherford County has affordability in it.
That's good.
Crystal, Andrew said it was a pizza oven, not an air fryer.
I didn't say an air fryer. I don't know what they put it through.
She said a toaster oven. Hey, I don't cook either, Crystal. I see kindred
Oh,
spirit.
girl, don't say either. I could throw down in the kitchen, Miss Belinda. Fun fact about me.
Hey,
Of course,
fun fact about me, only way I know how to cook's with my credit card.
well, we've been doing that a lot lately. And I tell you what, if these daggum house deals don't stop falling through, I'm going to have to, I don't know what I'm going to have. I'm going to have to go back to the government cheese. That's what I'm going to have to do. And that's okay. Because that's some good cheese. So,
So
yeah, it's, yeah, so there's a lot of people, that got the credit issues, but that's life. Life gets you
Yeah.
down, things happen, the economy. So it's good to have, reminders, that it's not impossible to come back from. And some it's not nowhere near as hard as you think it's going to be. You just,
Exactly. And you just have to start somewhere.
yeah.
yeah,
Well, Linda,
you
on
got
that
to get,
note, what do you think about trusted credit repair services and specialists? What's your
They're
thoughts on those?
they're super expensive. I would tell you that if you can get with a good lender that can help you and help you get it fixed, I would recommend that all day long because my services are free. I'm going to give you the
yeah,
information for free if you'll do it. Now, if it is at the level that you need credit repair, that legitimately it's beyond what I can help you with, then that may be what you have to do. In that case, I am not a proponent of bankruptcy, but I would also encourage you to talk to a bankruptcy attorney as well if it's to that level.
yeah, yeah,
Yeah,
because
I mean,
sometimes you just need to wipe the slate clean, you
Yeah, I
know?
mean, there are times that bankruptcy makes sense. I mean, and again, I'm not telling you to go file bankruptcy today. That's not what I'm saying. I'm telling you, you need to research and see what's available. I mean, I've seen people file bankruptcy on $5,000 worth of credit cards. That was not smart. That was not
Smart.
smart.
No.
And then I've seen people have $300,000 worth of medical collections, and I honestly don't know any other way they would have gotten out of that.
yeah. Sometimes it makes sense. I mean, I have to sit and say, me and my wife have gone through it years ago. We thought we were doing the right stuff, and we had, you know, I allowed my mom to use a card and messed me up and trying to help here and there, and we just finally had to just kind of cut the cord and bite the bullet and do it. Which
Right.
it's in the long term, it's we're in a whole lot better place.
Yeah.
Exactly. And
So
it's one of those things that when you do it, next time what to do to avoid it, right? You
correct.
this you've learned a lesson from it, right? That
Yeah.
and again, there are definitely times that I mean, I've looked at credit reports before and that my thought was they need to see a bankruptcy attorney.
Yeah.
I mean, really and truly. I mean, there's things that happen, whether they lost their job, whether they had a medical issue. I mean, there's a thousand reasons.
Yeah.
But again, the good thing is most everything you can overcome most everything if you put a plan in place and start
Yeah.
working towards that goal.
Yeah.
Yeah.
Well,
Yeah.
I
And
know.
sometimes just it's better to seek out advice, don't just sit and dwell on it and think, oh my God, what am I going to do? And just get further and further and further behind. Because it's like once you get behind on something, especially if you're already struggling to keep up, once you get behind, it's like a domino effect. And it's just
Right.
next possible, for some people. Um,
Yeah.
so yeah, scared to reach out, and say, hey, what can I do here? And it's just being educated. Me growing up, my mom never had credit cards. She didn't work. She didn't teach us, about money. So we had no idea. We had to learn it our own, our own way. And some of us did, and some of my siblings didn't. But my kids, it's like as soon as they turned 18, secured credit card. I'm talking about the day they turned 18. And,
Yep.
every one of them and had done bought a house by 19 years old, 20 years old. They're on their second and third freaking house now. And that's you just got to start out educating your kids on how money works, how credit works, because as sad as it
Right.
is, you know,
Yeah.
You're
I do the
exactly
same
correct.
thing. Same thing. I didn't have my parents were bad with their money and didn't manage it and everything else, which was partly the reason why I ended up in the situation I did at times because I wasn't taught and I had to learn.
yeah,
And I taught my kids over time.
yeah,
It's like, hey,
yeah,
and my son asked me. I remember my youngest when he went to college. I said, "You're going to get credit card, you know, applications." I said, "Find one that's got zero, fees on it, and just get it." He's like, "Why?" I said, "Just get it. Don't spend no more than this." And now he's better at credit than I am. And he's just rock
yeah,
and rolling. He's on his second house now.
yeah.
Yep.
So, but Belinda, do you do Florida?
We do. I can lend in 45 states, and Florida is one of them.
Yes.
There you go,
45.
Donnie and Mila.
Yeah.
So,
Uh, Trying to think. That pretty much covers. Can you think of any other credit repair tricks or?
I would just tell you that always pay your bills on time. Pay them within
Yes.
that window. You have that window. If you don't get discouraged, don't be like, "Oh my God, it's late. I might as well not even worry about it now." If
Yeah.
you're within that window, it's not even affecting your credit score yet. Okay. So always try to pay within. I will tell you, if you have a mortgage, always pay the mortgage, in my opinion, first, okay? Because
Yeah.
on late payments, when I'm looking at credit, I can overlook car lates, I can overlook credit card lates 1,000 times faster than I can a mortgage late. So always try to pay the mortgage payment first if you're struggling. Also, a second mortgage, a HELOC, is also a mortgage. So if you've got a second mortgage or a HELOC, always try to pay that as well. So a lot of times I had a customer and they're like, "Well, we got behind, so we just didn't pay the HELOC." Oh my gosh, now it's mortgage late. Now you've got your back. Now you're in that penalty box over here. So
Yeah.
always try to pay that mortgage payment. If you're struggling, that's your first priority, in my opinion.
yeah, Belinda,
Because it's
real
what?
quick. So, what'd
It's
you say,
12
Crystal?
months you have. Is it 12 months you have to wait after a mortgage late?
So it depends on how late is late. If it's a 60-day late, yes,
Oh,
you're looking at that 12 months typically. If it's a 30-day late, it just sometimes I can like conventional's a little bit more forgiving on that, which sounds odd, but sometimes
yeah.
after about 6 months, the score's recovered enough that I can do it.
Okay.
Okay.
Adam, you.
Well, we've got a lot of first-time home buyers that this is partly of what we talk about on this. Um, Tell us about your class tomorrow that you guys
Yeah.
are doing, and you guys are doing that once a month, right?
We do it twice a month. We do it once on a Saturday and we do it once on a Wednesday. So we do an online first time homebuyer class, low pressure. You don't even have to turn your camera on and participate if you don't want to. You can just sit there and listen. So we're not going to call you out or ask for your email address or ask for your home address to come sign you up for a mortgage. So super low pressure. It talks about different products and programs, touches a little bit on credit, but it's just kind of like a 30,000-foot view. Where I find it's really helpful is for someone who's thinking about a mortgage and they want to know a little bit more about a mortgage, but they aren't ready to buy just yet.
Now, first-time home buyers consider what's the guidelines for a first-time home buyer?
A first time home buyer has not owned a primary home in the last 3 years.
Now,
Okay.
are there really any kind of first-time home buyer programs?
So THDA is our first time home buyer for our county. So yes, first time home buyer, we would work with THDA. We have some additional grants that require you to be a first time home buyer. Um, some of our 97% loans require first time home buyer. So yes, there are some advantages.
It's good stuff.
Anything
Do you
else,
have more?
Crystal?
You were on a roll there, Adam. I was like, wait, where are they coming from? That's good questions. No, I think that just about sums it up. We're getting close to the, well, here 9 o'clock. So there would
Well,
be
it's
8 o'clock.
5 till 8 here. So
Yeah. Belinda, we thank you so much. I know this was your idea for the credit repair. And yeah, I mean, there's such a need for it. And so many people want the dream of home ownership and they just think that it's just not, it's out of reach and they have, no chance in Hades. So I
yeah,
hope tonight kind of open somebody's eyes to where, you know, like you said, well, Adam said, it's not like, you know, pulling the credit. It's kind of to help you
it's just a
know what,
checkup.
yeah, well, a checkup, but it's also you come up with a game plan, right, Belinda? You tell them
Exactly.
this, and this, and you're golden. If you can follow what you write down, then you can do it.
Absolutely. Um, and that's the great
Uh,
thing is the dreams are achievable. We may
yeah.
have to work for it, but we can achieve it. So I would encourage anyone that's interested to reach out. And again, do not be embarrassed. I have done this for 32 years. I have seen everything. So don't be embarrassed. Everyone has to start somewhere. So reach out. Let's see where the starting point is and let's move forward.
Yeah, I try to tell
Yeah.
people. I mean, you go to the doctor to take and find out, make sure that you're good and healthy, but yet you find out you got issues. If I didn't have to go to the doctor, I wouldn't have issues. But I mean, it's the same thing. You go to a lender to find out what your credit is and what your finances are to buy a house, and find out you got to do some work. So, I mean, it's the same thing.
Then you just fix it.
That's
Then
right.
you just fix it.
That's right.
Yep.
And you can only fix it if you know about it.
Exactly. And know how to
Right.
fix it. So,
Exactly.
well, we
All
thank you
right.
so very much, Belinda, and information just in case somebody does want to reach out to you.
Sure,
They've got,
sure. So mine is there. Hey, I may can put it in the chat. Hang on. Let's
I,
see.
Yeah. See if you can put it in the chat.
there you
My
go.
number is 615-416-4464, and you can call or text me. And can you see it?
Uh,
Messages.
Again, I
all
got
right.
the
Say it
old
to me again, Glenda.
615-416-4464. So reach out anytime. I'm always happy to help, always happy to answer any questions you may have.
Thank you
There we
so
go.
much, Belinda. Yay!
Yay.
It's in there multiple times.
Hey,
What'd
it's
you
better to
say?
have it.
So,
That's right. Well, we appreciate you, Belinda, and we hope to office here soon.
Fantastic. Well, have a safe trip and enjoy.
Thank you.
oh yeah, she's on her way. When are
Ad,
you gonna get to Maine?
well, tomorrow we leave for Boston, and then up to Massachusetts. We're gonna go to Salem, Massachusetts, and
Oh,
then
I'm so jealous.
Watch out for the Salem witch.
hey, we're gonna bring her back.
I love it.
Yeah,
All
all
right.
right. Thank
Y'all
you,
Be
be
Adam.
safe, Belinda. Thank you
safe.
again, and we'll see
Anytime.
y'all next time. Have a great night. Be safe.
Bye.